This is the Asia Trade live from the Bloomberg New Economy Forum in Singapore. I'm Shery.
And I'm Avril Hong. Here are your top stories this hour. Asian markets facing pressure after a big reversal on Wall Street as some speculative areas of the market unwind. Worries are also growing about the Fed's ability to cut interest rates.
Japan prepares to unveil its biggest spending plan since the pandemic era, including $112 billion of spending through an extra budget.
Also ahead, OpenAI partners with Foxconn to design hardware for data centers. We'll be digging into that with its chairman later.
Plus, more conversations out of the Bloomberg New Economy Forum as the conference prepares to come to a close here in Singapore. Avril is the last day of the New Economy Forum, but not without really good insights to come when it comes to the state of the economy, the state of the markets, and of course, the future of artificial intelligence. And that exuberance over AI and NVIDIA's results really fading in the overnight session on Wall Street, where we saw the markets pressured. Of course, it didn't help that we also got a mixed jobs report as well.
Yeah, and also among the conversations that are happening here about fiscal worries, right? You think about Japan and that stimulus package that's to come, and how among the conversations that are happening at this event, it also includes that with the Greek Prime Minister. Of course, this is a country in Europe that stands out, and its ability to have reined in the debt to GDP ratio in the country. But let's take a look at some of these Asian
markets. What lessons could we take really from the European experience, right? Because are we going to see a least trust moment with the Japanese markets? Could we see a triple dip? Stocks down, yen down, bonds down. We'll be awaiting that fiscal package today as we continue to see the downside pressure on Nikkei futures and the Japanese yen at that 157 level, prompting concerns, of course, about potential intervention to come. And all of this as we continue to watch the Japan-China spat as well, that diplomatic standoff continuing between the two sides. We'll be watching the offshore yuan. 711 is a level right now.
Yeah, you talk about the data out of the U.S., right? We were waiting out for the September jobs report. Not only did we see jobs growth picking up, it was also the jobless rate. So now investors are focused on the cracks in the labor market in the U.S. and what this means for the Fed rate cut bets for the month of December. Of course, overnight, we saw how investors really focused on this bad news for the economy. Treasuries, the dollar, they rose, and even NVIDIA's beat didn't help U.S. stocks. The moves got so bad that intraday, it was the 12th largest dip from open to the close since 2021, and that's been driving volatility. And I guess as part of the times, the sign of the times, right? We've been seeing Bitcoin struggling to rebound, Shery.
Yeah, so no wonder we're seeing this mixed rhetoric as well when it comes to policymakers, right? Take a listen to what they had to say in the overnight session.
I think the Fed does need to go ahead and cut again. You know, when I travel around the country talking to businesses, which I have hit 36 out of 50 states on my 50-state tour before, you know, the Democratic shutdown happened, those business owners are wanting to borrow more money at a cheaper rate to invest in their workforce. That is what they're asking. And so I think another rate cut is exactly what we need to really grow this workforce.
We've got a series of geopolitical and policy shocks that have come in that are masking, in my view, this underlying, the economy's pretty strong, and I feel like eventually we are going to be back to rates can come down a fair amount. But in the near term, I'm a little uneasy front-loading too many rate cuts.
Let's bring in Pooja Malik, partner of Nipun Capital. Pooja, so what part of the employment report are you taking a look at and focusing on, given that it could go either way, right? Does the Fed need to cut in December?
The employment report was mixed, and I want to remind you that Powell has always advocated for a data-driven approach. Given the lack of data and the mixed signals coming from the data, I think it's likely that the Fed exercises caution at this point and just keeps rates where they are. Now, what do they need to do is an interesting question because, you know, that will also depend on where the data and the GDP numbers come out. But I think for next year, whether it's, you know, early winter or whether it's spring, U.S. interest rates are headed directionally down. And that has to also go hand in hand with increasing political pressure on interest rates.
What does that mean for other trades like the artificial intelligence exuberance that we've seen? Because it seems now that we're through NVIDIA's earnings, we're now focusing on Oracle as well. Where are we going to go when it comes to this trade broadening out?
You're right. The trade is broadening out, which is actually a good thing. We're seeing it broaden out beyond semiconductors to application companies, software companies, routers, all of the products that are needed to unlock value with faster GPUs and faster chips. And we've seen this broadening out not just in the US, but also in Asia, in China, in emerging markets. Nevertheless, structurally, I think the AI trade is intact in the sense that there's structural demand for AI products. But the two things that are happening is, one is the broadening out, and the second is the dispersion or divergence within semiconductor stocks. So this year we're seeing, or I would say at least the last few weeks, we've seen more of a reaction to earnings as opposed to just the broad AI trend lifting all boats. We're seeing AI stocks with good earnings do better than AI stocks that are investing heavily but not seeing payoff as yet. So both of those things I think are good for stock picking.
How much will investors have to look past all this, though? I mean, you talk about the dispersion, but we also have among the Fed speakers, some of them are sounding the alarm or sounding more cautious on inflation. So how long-term of a view do you have to look past all this?
I think between now and year-end, you're likely to see continued volatility. And that has to do with investors taking risk off the table. It has been a very strong year in equity markets. The US is up, 15 to 17% for the year, but remember that's coming after having many years of double-digit returns. Emerging markets is up 30% this year. So I think between now and year-end, you continue to see volatility as investors de-risk going to year-end and take some of those profits off the table. As we turn into next year is, I think, where investors will take a fresh look at what the Fed is likely to do and then sort of reset expectations into next year again.
Talk to us about, the favorability from what's been a soft dollar this year for EMs. But when you look at how valuations are still pretty expensive, to what extent is that going to still figure into the equation in 2026?
Yes, valuations are, I would say, more inflated in the US than in emerging markets. If you look at China, which is one of the biggest markets in EM, it's still trading at a P multiple of 13 to 14 times, which is really not expensive, given that the government there is supporting growth. So the Chinese government, in its new policy plan, is supporting a very strong GDP target of 5%. They're supporting investments in technology, in infrastructure, in semiconductors. So in China itself, we're seeing the GDP base broaden out beyond property into technology. All of those things would argue for the fact that China could see a further re-rating and that multiples of valuations that you alluded to earlier are really not all that expensive in EM and in China. Now, it does vary, and we can talk more about India at a later point where I think valuations are still high despite the fact that India has lagged this year. Or Latin America, where there's still vulnerability. But I think at an aggregate, there's still more upside in selective parts of EM.
Actually, tell us a little bit more about India, because we have seen, of course, the measures in China to support the economy there. But how is India doing, and can it actually offset some of the demand weakness that we've seen so far in the Chinese economy?
India is struggling primarily because as an economy and as a technology sector, India has not participated in the global AI trade. So if you look across EM, Korea, Taiwan, and to some extent China are benefiting from the structural demand for EM. Latin America has done well because of commodities and gold, as has South Africa. But India does not have either of those two trends in its favor. Further, the India-US trade relations have taken longer to sort out, and there's still continued uncertainty on the horizon. India was benefiting from cheap oil from Russia, but that's coming to an end now. So India still looks risky, and to the extent that government support is there, it has been much weaker than what we're seeing in China. So there are many reasons for India to look vulnerable at this point, and it is likely that India could have another year of flat earnings and flat growth. It also trades at between 22 to 25 times PE, which is expensive in a scenario where growth is slowing down.
Especially at a time when we're seeing so much focus on the tech sector, right? Here at the New Economy Forum, we continue to talk about the exuberance over artificial intelligence, and Northeast Asian economies really focusing on that tech dependency. So could that be the next wave of growth, not only when it comes to the market exuberance, but economies here across Asia?
It absolutely could, and that's why you're seeing this big revival in Korea, for example. So Korea, for the longest time, traded really cheap because Korean tech companies, be it Samsung or SK Hynix, were always seen as commodity plays and not having pricing power. But at this point, there's so much structural demand that even commodity producers have pricing power at this point because the world needs more storage, more memory, etc. So you're seeing definitely AI having an impact broadly across Asia and EM. How that plays out in India is still problematic because the Indian IT services sector is still lagging and quite hasn't figured out how to tell the AI story or how to take advantage of that. So I think there might be a period of readjustment where you continue to see the rest of EM benefit from the AI trade, but India less so.
Pooja, to your point about how it might be tricky into the end of the year, we are seeing SK Hynix, of course, in pre-market trade on next trade now, sinking more than 9.3% thereabouts. I wanted to pick your brains as well. I mean, when it comes to the fiscal worries that are dogging the developed markets, including the likes of Japan and in the US as well, how anchored do you see the curve?
In Korea specifically, you talked about SK Hynix, looking like it's going to open down today. In Korea, a lot of the rally this year has been driven by the return of the retail investor. So in March of this year, Korea launched a new trading venue called the Next Exchange. I'm sure you've seen it. It's open 12 hours a day. Most of the volume there is retail. And that's why the sell-off, because retail investors have gotten spooked, I would say, looking at the US this morning, which is why you get the sell-off in SK Hynix. But again, if you look at where SK Hynix was last year and where it is this year, stock's still almost up 100%. So, looking at the curve of adoption, even after all this, I would say, market hype in Korea, Korea as a market is up 80% year to date. That's the strongest market across EM and across the globe. It still trades relatively cheap in terms of valuation. So there could be more upside selectively in Korea for stocks that have pricing power, for stocks that have good earnings.
I wonder if you could also weigh into the FX implications from some of these stock moves. I mean, we've seen how weak the Korean won has been this year, right? Even with these investment pledges with the US.
Yes, and a lot of that is going to depend on what the Fed does. Generally speaking, a weaker dollar is better for emerging markets. A weaker dollar generally leads to a risk rally as well, which also helps EM. And of course, it helps in terms of exports. So I would say some of that started to get priced in this year with the dollar weakness. But again, there's more room there, especially as and when the Fed cuts, maybe in Q1 or Q2 of next year. So the market's looking at 2 or 3 cuts by June of next year. And as and when that happens, that's likely to provide more support across Asia.
Pooja, good to get your insights on what is shaping up to be potentially quite an exciting end to 2025. Pooja Malik is partner of Nipun Capital. Also coming up on the Asia Trade, Oklahoma Governor Kevin Stitt joins us here at the Bloomberg New Economy Forum to discuss U.S. economic policy. We'll be talking AI with note-taking firm Plaud. Plus, FCLTGlobal tells us why they think quarterly earnings should be replaced with semi-annual reports. Much more ahead. This is Bloomberg. Here are some top global headlines we're following. The U.S. ambassador to Japan says Washington has Tokyo's back in its ongoing dispute with China. George Glass accused Beijing of economic coercion and says some of the Chinese reaction has been, quote, outrageous. He also confirmed the U.S. treaty pledge to defend Japan, including over some islands disputed by Tokyo and Beijing. One Japanese lawmaker told Bloomberg the country should leverage its alliance with the U.S. to counter China's threats rather than seeking quick compromises.
Fundamentally, we absolutely must not yield to intimidation. Once we give in to threats, everything, our economy and everything else, becomes their weapon.
Estimates from China Trading Desk show Japan could lose out on as much as $1.2 billion by year-end, as would-be travelers from China cancel their trips amid the worsening diplomatic spat. Tensions have flared after Prime Minister Takaichi became the first sitting Japanese leader in decades to publicly link a Taiwan Strait crisis with the potential deployment of Japanese troops. China has dismissed Japan's claim that its Taiwan policy remains unchanged and repeated its demand that Takaichi retract her remarks over the island.
Ukrainian President Volodymyr Zelensky says he's willing to work on a U.S.-drafted peace plan that was developed by Russia and with Russia. The proposal includes demands to Kyiv to cede territory and the removal of Russian sanctions, which Ukraine says are unacceptable. Zelensky says any deal must still guarantee a just end to the war.
Take a look at how U.S. futures are trading at the moment after we saw that downside on the Wall Street session. Surprising given that we saw the global stocks rally on NVIDIA's results, but that's really not holding. And we saw the VIX topping 25 overnight. And all of this to do with that really skepticism about where all of these AI spending will go. Not to mention that S&P 500 has been pretty expensive, trading at 22 times projected 12-month earnings above the 10-year average. So we continue to watch and digest, especially the U.S. jobs numbers, because they were pretty mixed. We're talking about payrolls increasing, but also the unemployment rate now at the highest in 4 years. Still, we are hearing from policymakers that they do want to see a move from the Federal Reserve. U.S. Labor Secretary Lori Chavez-DeRemer wants the Fed to continue cutting rates.
Yeah, and this is even after that delayed September jobs data showed hiring well above those expectations. She spoke with us about the latest jobs report.
This was a solid report for the September numbers. We'll have to see how November numbers come out in mid-December, but I think that this is good for the American people. We know that more people are wanting to work and they're actively seeking those jobs, and so it is my responsibility to make sure that we have that skilled workforce. And so I think that you're going to see consumer confidence. And again, with prices coming down, energy prices, gas prices, we're seeing real wages go up, blue collar wages have gone up over the last 60 years, and I think that that's the exciting part of this, is that we're seeing people who are wanting to get on the ground, have the skills that they need, and get in the workforce.
Secretary Chavez-DeRemer, you might sound very similar to those who don't want this Fed to cut, that this is a healthy labor market. The president, though, even jokingly yesterday was saying Scott Bessent would be fired had he not been able to get this Fed to cut. So in your view of this labor market, is it strong enough that it doesn't need assistance from the Fed?
Well, I think the president has been pretty clear on this issue. We did see the 2 rate cuts. I think the Fed does need to go ahead and cut again. You know, when I travel around the country talking to businesses, which I have hit 36 out of 50 states on my 50-state tour before, the Democratic shutdown happened, those business owners are wanting to borrow more money at a cheaper rate to invest in their workforce. That is what they're asking. And so I think another rate cut is exactly what we need to really grow this workforce. I mean, we see GDP is up 4.2%. I think that that's positive growth, and we want to see more private sector jobs come online. Out of the 119,000 jobs, we saw 97,000 of those jobs have been in the private sector, which is way different than the Biden administration when we saw they were all government jobs. So I think we're on the right track.
It does seem like inflation is a concern. We heard that from Walmart today, that it's got to pass through these tariff costs somehow. Are you not worried that we have a rise in inflation that hits lower income workers especially hard if we continue to cut rates?
Well, I think what happens when you're talking to the American families every day, they want affordability. So they look for ways in order to provide for their families. As a former congresswoman and as a former mayor, I know how important that is each and every day. What we want to do is grow this workforce so that they can have more money in their own pockets. These policies that came forward with the working family tax cut are going to start to hit. No tax on tips, no tax on overtime, no tax on Social Security. I think that that's what people want to see is more of their hard-earned dollars in their own pockets for their own choices.
U.S. Labor Secretary Lori Chavez-DeRemer speaking with Bloomberg's Matt Miller and Danny Berger. We have more ahead on the Asia trade. This is Bloomberg. Now, Shery, it's really been quite remarkable how we were anticipating the NVIDIA event, but at the end of the day, despite the beat, it didn't help market sentiment. And we saw that selling, right? Asia already had a head start in this late in the session, and then that kind of translated into what we saw on the NASDAQ as well. For the moment, we are watching out for what we're seeing pre-market in the chip giants in South Korea. We are seeing greater volumes in terms of what normally trades this time. So pointing lower on some of these pre-market moves.
Yeah, Samsung, $200 million in volume, which is really double what you said. Normal trading at this hour, but you can see the downside that might continue throughout the Asian session. And remember, SK Hynix and Samsung take up about 30% of the Kospi, so you can see where that market is headed when markets open at the top of the hour. But it's really about this artificial intelligence boom and the skepticism now rising among investors, especially as we are through NVIDIA, but we do have Oracle results also coming up December 9th. And remember, this is a company that has spent so much on the AI infrastructure build-out, which is a key topic of conversation here at the Bloomberg New Economy Forum, the last third day here in Singapore.
And those questions still swirling at this event about the extent in which the AI infrastructure build out and the energy demand, can that be done sustainably, right? We continue to talk about that. And then you think about the need for infrastructure in this long-term plan for AI. Does that also add to some of the fiscal worries for governments as they go about trying to make their economies more competitive?
If we're going to talk about fiscal worries, we have to talk about Japan, and we'll get there. But I do want to mention that we do have a panel coming up, Bitdeer Technologies. And this is the Bitcoin miner that's actually changing its infrastructure into data centers and AI. Can that be the future to power artificial intelligence? These are the guests coming up. This is Bloomberg.
Always in line.
We have breaking news out of Japan. We are getting the national CPI numbers, year-on-year growth of 3% for the month of October, which is beating economists' expectations. But the one that we're watching really, really closely is the core CPI. Exclude fresh food and energy, year-on-year beat of 3.1%. That's the one that the Bank of Japan cares about. And we're expecting this to edge up. Companies have adjusted prices at the start of the fiscal year second half. But then at the same time, of course, we have this government in place in Japan that wants to continue to see ultra-loose policy. And of course, those concerns about policy credibility now sending the Japanese yen, bonds, and potentially stocks also lower. But suffice it to say that CPI is beating economists' expectations and continuing to accelerate, Avril.
Yeah, to your point about this being a government that wants to see loose policy, not just on the monetary front, but fiscally as well, it's set to unveil a $112 billion fresh stimulus package. And then there's that expectation that beyond this one, sometime next year, we might get even more of that support for the economy. So certainly on the long end, those concerns are still playing out, although JGBs are climbing a little. That's worth noting, tracking the moves that we're seeing in treasuries overnight. Now, let's take a look at the other riskier assets in the market, including cryptocurrencies, because it's worth noting how that has really struggled to recover, even as the stock market AI bubble fears have been allayed a little. The investor focus is still on the risk off, so they are taking money out of these speculative areas in the market. We're still seeing Bitcoin below the 90K handle.
Yeah, which really plays into the Japanese yen story as well, right? Would you think that if you have this risk-off sentiment, you would see safe haven flows into Japanese yen, and that's not happening at the weakest level since January? And you can see Bitcoin also continuing to be under pressure, a self-reinforcing sort of deleveraging cycle, pretty violent since its liquidation in October.
Shery, let's talk about some investments that have been undertaken, though, by this Chinese investment firm that's said to have bought a block of Bytedance shares at a valuation of $480 billion. This is far above recent levels. It's a sign of strong investor interest in the parent company of TikTok. Let's bring in our China correspondent, Min Lo.
Yeah, Min, so it seems like the TikTok deal not necessarily dampening investors' interest in the firm.
Yes, I mean, the TikTok deal is still hanging in the balance here because the Chinese government has yet to formally approve it, even though President Trump said that it is pretty much a done deal. But as far as we know, the structure of that deal wasn't as bad to TikTok as we had initially thought, because under the deal, TikTok could still, or rather Bytedance could still get about 50% of the profits from its U.S. operations under the licensing deal if it comes through. So that doesn't seem to be putting off investors. I think another reason is that it's quite a rare opportunity to get your hands on a big slug of the company's shares, right? It's being offloaded by an early institutional investor, Bank of China Investment Group, and investors are also keen to seek exposure to not just its global content and user base, but also its AI developments as well, because its AI chatbot Doubao is currently still the leading chatbot in China right now.
Min, there's so much focus on this firm amid the tussle between the U.S. and China. What else do we know about it? This trade, the firm that bought the shares, is this valuation too high?
Yes, this firm that bought the shares is called Capital Today. It's a private equity firm founded by Kathy Xu, and she has been a long-time investor in some of China's largest tech giants, including the likes of Meituan and JD.com. And we know that the block sale was initially priced at $200 million, but there were at least as many as 7 bidders that were driving up the price. Eventually, it sold at $300 million, and that puts the total valuation of Bytedance at close to $500 billion, up from a $360 billion valuation. And to give you some context, it is extremely high because the current most valuable startup is OpenAI, priced at about $500 billion, and the second most valuable would be Elon Musk's SpaceX, coming in at $400 billion. So this put Bytedance's valuation above SpaceX, just tailing behind OpenAI. And well, some investors are saying it's not too high, given that you have other companies, the likes of SoftBank and Fidelity, also raising or marking up the valuation of Bytedance in their books as well to above $400 billion. And mind you, SoftBank's methodology is still placing the valuation of its U.S. operations at 0, and even then they're placing the valuation of the rest of the company at above $400 billion.
Yeah, Bloomberg's China correspondent Min Lo there. And talking about OpenAI, it's partnering with Taiwan's Foxconn to design and manufacture hardware for data centers. Foxconn will co-design and develop data center server racks with OpenAI. The firm will also work to ensure these racks can be manufactured across the U.S. The agreement does not include specific purchase commitments. It marks the latest move by OpenAI to meet its growing need for infrastructure to support AI systems.
And staying on Foxconn, Shery, the company is doubling down on its belief that the EV industry will adopt the outsourcing model embraced by PC makers. The Taiwanese tech giant has established a battery pack facility with production set to ramp up next year. Our Bloomberg Asia tech correspondent Avril has this exclusive report.
Foxconn's best known for assembling Apple iPhones and now is a major producer of AI servers. But here in the city of Kaohsiung in southern Taiwan, a different bet of Chairman Yang Liu is taking shape. His goal is to transform the tech giant from traditional manufacturer into a leader in new, higher margin activities. EVs, digital health and robotics are at the core, all of which require power packs, which Foxconn wants to mass produce. Troy Wu heads up a team tasked with achieving that goal.
In the future, we believe the scale of the battery will not smaller than the semiconductor itself.
But the company faces a tough path ahead, even with production of EV cells already underway. First is materials, with many Foxconn suppliers relying upon China, which has been flexing its grip over rare earths. Then there's competition, not just from across the Taiwan Strait, but also battery heavyweights in Japan and Korea, plus building out distribution channels. So far, Foxconn has just 3 buys for its vehicle product, though it's planning to increase output in 2026. Still, that's not a deterrent for the company, which sees a big opportunity in AI in particular. It already counts hyperscalers like Amazon, Microsoft and Alphabet among its biggest customers, plus Nvidia. Now Foxconn's working on energy storage cells that could become key to managing the huge power demands of AI servers.
For the long-term consideration, a stable power supply for the AI data center is very important for AI data center operation. So battery can play a very, very important role.
There are links to other parts of Foxconn's business.
Currently, Foxconn already take around 40% server market, manufacturing market. Their customer, they always request the better, the safer battery technology and the better efficiency battery technology for servers. So we now currently we work with our BG or subsidiaries who work with the server client.
Foxconn's chairman is optimistic about the business heading into next year and says AI will be the biggest driver. It's too early for batteries to contribute any meaningful revenue, but they are part of the long-term vision. In Taiwan, Annabelle Drulers, Bloomberg News.
Annabelle Jolas there will be speaking with Foxconn chairman Yang Liu later today as well about the firm's AI outlook and the impact on businesses. Now let's take a look as well at what we're seeing in the yen pairs, because it's really been a story of currency weakness for Japan as those fiscal worries weigh. And now some investors and market watchers not even sure whether finance authorities are going to pull the trigger when it comes to intervention. Although there are also those who predict that given the foreign reserves that Japan has, that could be a real possibility.
We're hearing from the finance minister Katayama speaking right now, saying that she's seeing rapid one-sided moves in the FX market, very classic rhetoric when it comes to the Japanese yen and potential discomfort to the weakness of the currency. She's saying that it's vital that FX moves stably, reflecting fundamentals, deeply concerned about current FX moves. Finance Minister Katayama saying that they will take appropriate action against excessive moves in the currency. Of course, this is just verbal intervention right now, trying to support the Japanese yen when we have already seen it fall into oversold territory at the weakest level since January. And Finance Minister Katayama now making sure that investors know that the government will take appropriate action if they continue to see what they consider excessive FX moves. Remember, the last time that Japan intervened in the markets was last year in July, and that was at around the level of 160.17 for the Japanese yen against the US dollar. Katayama also saying that they will refrain from commenting on specific levels. Remember, they don't talk about 157s, 158s, or 160s, but Katayama saying that they will respond to the FX moves based on the US-Japan agreement, that they will issue bonds if existing funding isn't enough, that intervention is included as a possible response. So we continue continue to see these verbal intervention moves coming from the Japanese government.
Yeah, jawboning that makes you wonder how investors should be taking this quite seriously, to your point about not looking at absolute levels. We know how finance authorities, monetary policy makers, they have been suggesting that 10 yen move, that volatility is one that they would pay a bit more attention to in the past. Now, a reminder of some of the big names joining us today right here at the Bloomberg New Economy Forum. We'll be speaking very shortly with Oklahoma Governor Kevin Stitt next as U.S. tariffs reshape global trade ties. This is Bloomberg.
President Trump is expanding tariff breaks for Brazilian food products. It widens the scope of relief from import taxes amid growing U.S. voter dissatisfaction over the cost of living. The latest executive order from Trump exempts dozens of popular food items from a 40% levy he imposed on Brazilian goods earlier this year. The decision could help bring down prices of coffee, orange juice, and beef.
Now, Shery, you talk about cost of living and how that kind of played out recently in elections in the U.S. We have with us Republican Governor of Oklahoma, Kevin Stitt. He's the chair of the U.S. National Governors Association and joins us right here in Singapore. And of course, the National Governors Association represents state executives in global conversations in labor, supply chains as well. Governor Stitt, it is great to see you. Talk to us first about what you're seeing in your state in terms of perhaps the tariffs and how ranchers and farmers are feeling about it. Do they want to see lower tariffs? Do they think they're benefiting from that?
Well, thanks. First off, it's great to be in Singapore with you guys. Excited to be here. I think that, what Trump's doing on the tariffs front, it's really opening the conversation and pushing manufacturing back to the U.S. So I think Oklahomans are generally very excited about that. We are starting to get a lot of looks and more manufacturing, more companies internationally looking to move to Oklahoma. So that's exciting. We can talk about that. But obviously, his just moved to lower the tariffs on imports of foods. I think hopefully that will lower some of the inflationary pressure on our food costs, which is very helpful. But there's always a give and take, because then we've got producers for our we produce a lot of beef in Oklahoma. So there's always a yin and a yang to all those conversations.
The recent jobs report, though, doesn't necessarily show more manufacturing jobs.
Well, in Oklahoma, I was just meeting with a gentleman here, and we're talking about a new company in Oklahoma called American Lion, which is a recycling battery company that's relocated to Oklahoma. And they basically take the black mass and extract all the critical minerals out of that. So those are the kind of things we're looking at. And because of our energy cost, we have the most affordable energy in the country in Oklahoma. So we just landed a new aluminum plant from the UAE that's going to be building in Oklahoma as well. And so I think some of the conversations from Trump tariffs are also pushing people to think about manufacturing again in the U.S. to open up those markets.
Talk to us about how energy policy has been prioritized and oil and gas being big in Oklahoma, right? So what extent are you seeing that actually playing out already in that industry?
When I think about, first off, I've met with probably 80 different ambassadors. They always talk about energy. Energy is such a huge issue for all of us around the world. And in Oklahoma, we believe in all of the above, meaning we love our oil and gas. But what people don't realize as well is we're number 4 in the country in electricity generated by wind. So we just believe that you should get government out of the way and let businesses go innovate and meet the needs of Americans. And because of that, Oklahoma has the most affordable electricity of any other state. And that's driving people to our state. So I just also passed behind the meter, which allows a private company to actually sign a contract with our gas pipelines and put your own electric turbine and create your own electricity for your own AI factory or your own data center, your own manufacturing facility. So that's important.
Affordability, very important for all Americans. And then perhaps
100%.
one of the key issues that led to some election losses just recently. So how is the nation addressing that? Because I know that you speak to all of the governors in America. How are they seeing this shift?
You know, as governors, we have a very unique perspective. You know, we always see D.C. fighting politically, but governors...
What's going on? The longest ever government shutdown, come on.
It's crazy. But as governors, you know, I'm a Republican governor, and I have friends that are Democrat governors, and we really are focused on our states, and let's make sure we have the best economy, the best education, the best infrastructure. We want the best healthcare system. And so I think that we have a unique perspective, and that governors I talk to, even on the other side of the aisle, know that they need a reliable, affordable grid, and they ask me questions about how do you do it in Oklahoma? And it's permitting reform. We have to deliver gas pipelines to the Northeast, and we have some states blocking that.
To your point, I guess governors and on the state level, you could play a really key role in mitigating some of the political polarization. But when it comes to what we heard from voters on cost of living issues, do you see that as a warning sign for Republicans going into 2026 with the midterms, the gubernatorials as well?
You know, just like most Americans, I was shocked at the margin of victory in both Virginia and the New Jersey governor's races, for sure. But I think that's it usually happens in the midterms, right? It's kind of the pendulum swinging back a little bit as Americans not wanting one power. So I don't read too much into that. Those are pretty blue states. Governor Youngkin was an amazing governor there in Virginia, and he had an amazing victory 4 years back. But I wouldn't read too much into that. Of course, Americans want to make sure that the economy is thriving, and when you see cost of living increasing a little bit, but that's why we need to get government out of the way and let businesses work.
And in making businesses work, would you accept, for example, investments from China? Because the hawkishness against Beijing seems to be one issue that both sides of the aisle agree right now.
You know, I think it's important. I think COVID taught us that we need to control our supply chain, and we need to make sure that we have, back to the critical mineral issue, we need to have that, because you know, those critical, they go into fighter jets and cell phones, and we need to make sure we control that. And so,
but if they're not in national security concerns, when it comes to investments coming from China, would that be still an acceptable proposition, especially as a government that wants to see more jobs for your state?
We would be a little reluctant to open up with with open arms Chinese invested businesses in the state of Oklahoma. Just personally, just because of some potential conflicts there and some
I suppose that is what you're hearing among other governors as well, other states.
Definitely on the Republican side, and I would think on the Democratic side as well, that they're a little bit more cautious about opening Chinese-owned businesses, farmland. We're really looking at that in Oklahoma. So it's a big world out there, and we want to do business with our allies and people that think more like we do. And so I think we'd be a little more cautious about opening up to Chinese influence in Oklahoma.
Governor Kevin Stitt, really good to have you with us. He's the governor of Oklahoma and chair of the U.S. National Governors Association, joining us here at the New Economy Forum for the final day of the conference. And talking about trade and talking about American allies, we're getting the October export numbers out of Japan, rising 3.6% year on year. The estimate was for a gain of 1.1%. So we're seeing some acceleration when it comes to those export numbers. A trade balance still in the deficit of 231.8 billion yen, still slightly smaller than expected. Interesting, exports to the U.S. have contracted more than 3%. Exports to China have risen more than 2%. We have more ahead. This is Bloomberg. Take a look at how futures are setting up for the market opens in just a few minutes, because we just had the latest lines coming from Japan, both when it comes to the inflation numbers and trade numbers beating to the upside at a time when we're hearing from Finance Minister Katayama that Japan will take appropriate action if they see excessive FX moves. Of course, we continue to see the downside pressure on the Japanese yen. because partly of the government stance when it comes to ultra-loose policy. But when you look at these eco data today, pointing to upside.
Yeah, we are seeing the yen for the moment appreciating ever so slightly against the greenback, following on those comments from Katayama. She said that, they could be looking at intervention. So verbal jawboning, and this is comments made at a parliamentary committee session. We saw the yen gain as much as 0.2% to 157.2 levels. She did say, though, at the meeting that it's extremely difficult to strike the right balance between inflation, bond yields, and a weak yen, to your point about the pressure that the Japanese currency has been facing, Shery.
Could we see a triple dip, right? The yen falls, the bonds fall, stocks fall. Are we going to see a repeat of Liz Truss back in 2022 and the policy credibility taking a hit? When it comes to FX reserves by Japan, though, they have plenty of ammunition to support the yen if they do want to intervene. They've actually added $116 billion to FX reserves in order to defend the currency.
Yep, Shery, and also as we watch the open of trade in Japan and South Korea, take a look at where Kospi futures are pointing. It looks like it's going to be another down day in the markets across the Asia Pacific. We'll watch the markets open next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens and what could be a risk-off session across Asia. We had the downside on Wall Street with a mixed jobs report. And of course, we're also following the tech sector, given that we have seen pre-market trading already, Samsung and SK Hynix under pressure.
Yeah, I think it's the focus being drawn back to the situation in the real economy in the U.S. and the extent in which that is playing out in Fed rate cut bets for the month of December. To your point about the mixed jobs data, we did see jobs growth ticking up along with the jobless rate. So that is playing out, I think, in that investor caution, despite the beat that we got from NVIDIA just a day ago.
I know that exuberance just fading away, right, in the overnight session. One of the topics that we discussed extensively here at the New Economy Forum, remember, this is the third and final day that we're in Singapore talking about all of these concerns around artificial intelligence investing. Take a look at how the Nikkei is opening downside of more than 1%, but Japan is facing some other idiosyncratic news. Of course, we are talking about that fiscal package coming up. Could we see a triple dip? Bonds, stocks, the yen taking pressure, and maybe a Liz Truss moment from 2022 with perhaps an upheaval in the debt space. The Japanese yen holding at that 157 level. We heard from Finance Minister Katayama already saying that the government will take appropriate action if needed at a time when we continue to see eco data surprising to the upside. We're talking about the trade numbers. We're talking about inflation surprising to the upside. South Korea, take a look at how it's opening because we're getting the 20-day export numbers. For the first 20 days of November, growth of 8.2% for exports. Imports also rising 3.7%. Both numbers surprising to the upside. Well, that's not helping the Korean market right now. Take a look at Samsung falling more than 5%. With SK Hynix, they take up about 30% of the Kospi, which is down more than 2.5%.
There is so much data coming out of the Asia region today. And right here in the Lion City, where the Bloomberg New Economy Forum is being hosted, we're getting these final third quarter GDP numbers for Singapore, where the third quarter final reading for on year is coming in better than survey of expectations, 4%. It is coming at 4.2% of an expansion. And the seasonally adjusted on quarter basis number is coming in at in line with what the survey expected of 2.4% as well. You are seeing that bit of strength seeping into the Sing dollar, hovering towards that 1.3 level. But as we talked about the cracks in the U.S. labor market, let's take a look at treasuries because they rose along with the dollar overnight and against the backdrop of these expectations of what the Federal Reserve is going to do. Look at where the 10-year yield is right now. It is moving below the 410 handle. S&P 500 futures are looking quite flat. Maybe we see a bit of that upside, but to the gauge of risk off, turn your attention to Bitcoin as well. We're seeing that still below 87, Shery.
Yeah, the VIX also top 25, so volatility in focus as more Asian markets go online. This after we saw that unwinding happen on Wall Street overnight. Let's get to our Asia markets executive editor, Paul Dobson. Paul, what's happening in the markets today? I mean, the narrative seems to have shifted to where the Fed goes from here, but we also have Oracle numbers to contend with in just a couple of weeks' time.
Yeah, good morning. That was the biggest intraday reversal high to low in the US market since April, and it tells you that the anxieties and the clouds that have been hanging over us for the past couple of weeks weren't fully dispersed by those NVIDIA earnings. Far from it. You know, the pressure still tells. We've got this quote from our global wrap story yesterday that I think is quite telling from Matt Marley at Miller Tabak. He's saying, let's face it, most of the recent consternation surrounding the AI industry has little, if anything, to do with demand for AI chips. He says the concerns have really surrounded the question about whether the buyers of these chips are going to make the kind of profits from their massive spending which the stock market has been pricing in. And I think that's the problem, right? You know, people aren't so worried about NVIDIA's sales, and yeah, we know that there's huge demand for those chips. They're worried about, are we going to be able to pay for it all, and are we going to make a return on it as well? And that's why those Oracle earnings are going to be important, and why we're starting to see people expressing more of an opinion of risk in CDS, for example, of Oracle. And I think that that is going to ricochet back into the Asian markets again today. We're already seeing it with the chip makers, but more broadly in the tech sector with the numbers that you flashed up at the start. And it is, you know, feels like we're going to be under pressure, and also keeping an eye on Bitcoin, which has really been that sort of sentiment driver for trading in recent days too.
Paul, that ricochet you speak of, I mean, we are seeing those continued bubble concerns in corporate debt. Maybe that weighs and plays out in the sessions to come. But talk to us about what we're seeing in treasuries and the dollar and how that is flowing through into Asia as well.
Yeah, so Treasuries actually caught a little bit of a bid on the back of the US non-farm payrolls data yesterday, but I don't think that detracts too much from the bigger picture, which is that the market has basically concluded now that there's very little chance that we're going to see a Fed rate cut in December. So moving its attention already to a little bit more toward next year. We're in this data vacuum, or this cloud. It's going to take a long time to get away from it. Flip it over, I think actually more interesting is to look at it from our perspective, and particularly Japan today and this week, where that sort of sell Japan narrative has really started to make itself heard and felt. And you see that in the rising JGB yields, even with Treasury yields in the US staying relatively contained. So the Japanese yields are rising closer to US Treasuries. And normally you'd expect to see that supporting the yen, but no, none of it. The yen has been under pressure at the same time as the bonds have been selling off. And that tells you that there's some genuine concerns at the moment about how far Takaichi is going to go with the budget and whether the economy is going to be able to handle it.
And we continue to follow the Kospi at one point falling more than 4%, and we're getting some reshuffling lines coming from Samsung at the CEO level. So Moon right now staying as head of DX division. Now that's a device experience division, and he's also staying as head of the company's mobile business. We're also seeing some other changes. Chun Young Hyun will be staying as the head of the memory division as well. Samsung, of course, very important when it comes to the semiconductor space in South Korea, together with SK Hynix. But Paul, given, of course, this tech-heavy, tech-dependent economies, whether South Korea, Taiwan, or Japan, as well as you were talking about, what does this mean for the future trend of these markets when we have more skepticism about the AI trade?
Yeah, so I think, Shery, you've got to really think about it on the short-term and on long-term basis. There's still a lot of people saying this is just a minor correction, healthy correction even, given how much of a huge rally we've had through the year to date. People sort of, taking some money off the table as we get towards year-end, booking in those profits, are happy to trim their risk exposure until we get to the new year, but expecting that the long-term trend is still, and I would argue that this is, a very compelling narrative still, that we're in the middle of a mini industrial revolution. The switch to AI is going to, still be very exciting and transformative for the economy. We're still going to need these chips. We're still going to need the software, and the company leaders or the business leaders are still, in a very good place. I think there's going to be lots of discussion at NEF today about that. So you're going to be right in the vanguard when it comes to what the debate is. But short term, we're going to feel under pressure from this volatility and still working our way through it. And it feels like, with elevated levels of implied volatility, look at the VIX index now, you look at our markets as well, it's going to take a few more weeks to get over this road bump at the very least.
Yeah, a bit of obstacles hitting Asia markets for now, but to your point, that AI conversation does continue. Paul Dobson, our Asia markets executive editor, thanks so much. Now, as Paul was highlighting, it's about AI, it's also about global trade dynamics, and these have dominated the conversations here at the Bloomberg New Economy Forum in the Lion City. We are on the third, then final day of the event. Editorial director Eric Schatzker joins us now. So, Eric, it's been a really pivotal few days in terms of the conversations that have come out. What
Feels
stands
like it.
out to you?
Well, I would say, let me think. Because there's a lot to think about.
Yeah.
I had a conversation yesterday with Deputy Prime Minister Gan from Singapore and the chairman of Singapore's Economic Development Board. That stuck with me because the point that they were making actually about the New Economy Forum, and I don't want this to sound promotional, it's actually an accident of good timing more than anything else, is that now was the perfect time to have the New Economy Forum in Singapore. Why? Because 4 months ago, let's say, just abstractly, and that's the time frame they came up with, was too soon. Let's not forget that Liberation Day was only in April, right? It's only been a few months since Liberation Day, and not even 6 months, in fact. And so if, had we had this conference in June or July or August, people wouldn't have had enough time to soak in, or to soak up, let's say, and respond to this massive shift in America's posture relative to the rest of the world. And now they have, and what we've learned here at the New Economy Forum, perhaps more than anything else, and I suspect that this has come through in some of the interviews that you've done, and what people have said to you, is that the world has to get on with business, right? Countries are still deeply offended by the position that the American government has taken with respect to foreign, diplomacy, foreign relations, international affairs, tariffs, of course, and trade wars. But the reality is that they still have to get on with business, and that means striking trade deals with America, the American government, and thinking about how to diversify the relationships around the world.
And it's really interesting that you talk about the time needed in order to digest the U.S. policy stance, right? But at the same time, also perhaps see some of the outcomes, because we just got the September jobs report. Actually, manufacturing and transportation jobs, which is what President Trump really wanted to build on, have actually gone down. And I believe that's one of the conversations that you're having today, reindustrializing America.
Well, first of all, nobody should be surprised to see that the administration's policies aren't necessarily having the desired effects, first of all. Secondly, yes, the reindustrialization of America is an important theme. You'd think, oh, here we're in Singapore, why are we talking about whether or not America can reindustrialize? Gina Raimondo, the former Commerce Secretary, who is here, and I'm pleased to say a co-chair of our advisory board, made the point yesterday that the reindustrialization of America is actually a healthy thing for the global economy. It's not that the United States should try to become totally self-sufficient, but the idea that nations, not just the United States, but the EU, for example, as a group of nations, should focus on security of supply when it comes to anything critical to defense, certainly, and also economic stability is not a crazy idea. And so to bring together Governor Stitt, whom you spoke to just recently from Oklahoma, to bring to the table Gina Raimondo as well, and also Sarah Williamson, who represents, if I'm not mistaken, trillions of dollars in long-term capital, really helps to, I think, answer the question. And that is the answer that we need. Not whether America can. Of course, we can reindustrialize up to a point. But just how much reindustrialization is possible? Where is the money going to come from, for example? Let's not forget that the federal government and all the state governments are totally tapped out. So this is really about rekindling animal spirits in the private sector in the United States. And amazingly, attracting foreign investment as well.
And to your point that Asian economies shouldn't shy away or look with a negative connotation on this reindustrialization of the US, but we're also seeing that realignment in supply chains. You talk about industrialized economies, we are also focused on where we go next from here. And the likes of India, a land of immense opportunity, and we are, turning our attention there next year with the farm
Eric
as well.
being very excited about India.
I was absolutely. I want to talk about where we go physically, but for a moment I was thinking, and you say, where do we go next? I was thinking macroeconomically, where we go next is inflation. But in any case, no, physically, yes. The New Economy Forum is going to Singapore. Mike Bloomberg announced it yesterday to a round of great applause here at the forum itself. I think that says a lot, right? We have to make strategic choices about where we convene these conversations. Singapore has been an amazing place, a phenomenal host country for the New Economy Forum. But there's no doubt in anyone's mind that the future of India, in so many ways, is the future of the global economy. This is now the country with the world's single largest population, 1.4 billion people. It's still growing at a clip of 6 to 8%, which is remarkable if you think about a country of that size. And yet, as I was reminded yesterday, look at Singapore's GDP per capita. It's still in the single digits. And so India has an enormous way to go before it even comes close to catching up with China, let alone an advanced economy.
And we're talking about the economies, and we're not even mentioning geopolitics, where you're seeing the rivalries and the subtleties here across Asia. Eric Schatzker, thank you so much for making the time on a busy New Economy Days for third and final day here. He's the editorial director of the Bloomberg New Economy Forum with us in Singapore. We have more ahead. This is Bloomberg.
Let's take a look at what we're seeing in the Asia-Pacific markets. It is another down day. The Kospi down, 4% earlier in the session, pairing some of those losses for the moment, but it's really that drag you're seeing on the chip-related stock. Shery, you were just talking earlier about that CEO-level reshuffle in Samsung, but the NVIDIA earnings and how it has failed to allay concerns about this being a bubble, I think is what is still continuing to play out in the APAC markets. Of course, a key backer of NVIDIA had been SoftBank until its disclosure that it sold down its stake. SoftBank down 10% in the session. We also talked earlier about some of these data points from South Korea, right? The exports numbers to contend with as well. How does this potentially play out given what we've been seeing in the DRAM memory chip demand for South Korea as well?
And we've been also parsing through U.S. eco data. Of course, we got the jobs report, which was a little bit mixed, but we continue to hear from policymakers in the U.S. Not surprising, Secretary Besson coming out and saying that the Fed should be looking at the data and should keep going with the cutting cycle, that the key to affordability is lower energy costs. But of course, affordability linked with inflation. And there were concerns of higher inflation when President Trump rolled out global tariffs back in April, and economies were bracing for the worst in terms of prices. But so far, the price hikes that were forecast have yet to materialize. Bloomberg Originals investigates why.
Credit where credit's due, President Trump made a big bet that the US had a magnetic appeal, and that would enable him to get a better deal from US trade partners and companies that want to do business in the United States. On the evidence of the last few months, that bet is playing out pretty nicely. Economists don't agree on much, One thing they do agree on is that free trade is good and that tariffs are bad. For a moment, Trump escalated US tariffs on China all the way to 125%. If you plugged the US tariffs into a model of the global economy, what it said was that there was going to be a really significant drag on growth, and there was also going to be a significant upward impulse to prices. But when we look at what's happened to inflation over the summer, it's not come down, but it's not come up either. Why is that? It's because US importers and foreign exporters saw the Trump tariffs coming, and they rushed to front load shipping to the United States before the tariffs could come into force. One thing that's happened is that we've gone from a lot of unexpected bad news concentrated on a single day to a series of country-by-country deals. They're something of a Swiss cheese of exemptions and carve-outs. The trade war is a drag, but it's not the only thing which is happening. We've got tax cuts with Trump's One Big Beautiful Bill, and we've got a bonfire of regulations which is stoking the animal spirits of US businesses. We've also got the artificial intelligence boom and a huge amount of investment going into data centers. Tariffs are having an effect. China's exports to the United States are way down relative to the historical trend. So, who pays for the cost of tariffs? Despite his well-known love of gold, the president is not an alchemist. He can't make something from nothing. That money has to come from somewhere. All of the evidence so far suggests that in the end, the bulk of it is going to come from US businesses and US households.
Subscribers can watch the full documentary on The Terminal and Bloomberg.com. It'll also be available on Bloomberg Originals' YouTube channel later. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at how Japanese assets are trading. Is broad downside across the board, with the Nikkei falling more than 2%, and you have companies like Kioxia dropping more than 10% at the moment. This is a memory giant, of course, and right now the AI trade is taking a beating. SoftBank falling as much as 11%, the most since November 5th at one point, and this to do with SoftBank's big investments into artificial intelligence as well. But it's also the broader picture about the economy in Japan and fiscal concerns as well. We are expecting any time now that huge fiscal package coming from the new administration of Takaichi. So could we see a triple dip? Stocks down, the Japanese yen down. Look at that, it's already at 157, very close to 158. And you've heard from the finance minister coming out and talking about appropriate action if these FX moves continue. And we're seeing the downside pressure on JGBs as well. Let's cross to Tokyo and our North Asia government senior editor Brian Fowler. Brian, because when it comes to the Bank of Japan and potential rate hikes, that also seems to be in question given the government stance. And yet the economic figures out today, what are they telling us about the strength of the economy?
Good morning. Yeah, I think the figures today definitely nudge the BOJ just a little bit closer to a rate hike. Certainly keep the BOJ on track for rate hikes. CPI came in. We got the pickup that we were expecting. At 3% now, that core gauge has been at or above the BOJ's target for 43 straight months. And even as Governor Ueda says, well, the underlying trend isn't quite there yet, we still see signs that it's getting there steadily. In today's data, we saw service prices accelerate to a 1.6% gain, and that is definitely a sign of underlying pressure. We also saw certain gains in areas of showing demand-led inflation. Accommodation fees were one of the factors that pushed up the overall gauge. So that's definitely a plus. And then we had the trade data as well. We saw exports pick up 3.6%, even as shipments to the U.S. continued to slide due to the U.S. tariff impact. But this overall points to resiliency for Japanese exporters and shows that that engine of growth continues to tick along.
Brian, even if the data backs the case for the BOJ to hike, investors don't seem terribly convinced. You look at how the yen has quite quickly erased the gains that we saw following on from the finance minister, Katayama, talking about intervention. That seems like a reasonable policy response. All this given the expectations of what the fiscal package is going to look like. What do we know on that front?
Well, Avril, we know it's going to be a big package. We've seen the documents already at Bloomberg, and they point to the most ambitious spending plan since the pandemic. And that, of course, can cause some concerns for the bond market. And even some economists are worried that it could actually lead to overheating. But on the other hand, it's definitely there to address the underlying concerns that really undermine the LDP in national elections over the last 13 months, and that is persistent inflation that's weighing on households and crimping their ability to spend on discretionary goods. So the package is going to be one that definitely backs up Takaichi's reputation for being an expansionary policy supporter. And that does also, on the other hand, cause some concern about what that means for monetary policy. I would just say that Governor Ueda met with Prime Minister Takaichi earlier this week, and the key point he made was that the BOJ is on a track towards normalizing policy, right, which would entail loosening settings, loosening the easing. It's not tightening so much, it's just rolling back some of those easy settings. Right. And she understood that.
Bloomberg's Brian Fowler there with the latest on what's happening in Japan as we continue to watch that sea of red in today's trading, especially for the Nikkei, which is down more than 2%. This is Bloomberg. We're seeing a sea of red across markets in Japan as we continue to digest more eco data. The PMI numbers, the latest to break the composite for the month of November. Preliminary coming in at 52. It's been in expansionary territory for most of the year. Although manufacturing PMI in contraction, 48.8. The services number still firmly in expansion territory of 53.1. We continue to follow the latest on Japan when it comes to the weakness of the yen at January lows and potential intervention coming from the Japanese government. We are seeing yields falling a little bit today after multi-decade highs already. Of course, concerns about that fiscal spending to come in Japan, Avril.
Shery, we've really been getting data coming out of our ears at the Bloomberg New Economy Forum today. And on top of
we didn't have enough to follow today.
Yeah, just adding to the load, right? I mean, it's also about how I think we are so obsessed, not just with data points, but corporate scorecards, right? Every time they roll around. So worth bringing in our next guest from FCLTGlobal, non-profit dedicated to reorienting both corporate strategy and capital markets towards long-term value creation rather than so-called short-termism. It's CEO Sarah Williamson is here with us. Great to have you in the house, Sarah.
Thank you. It's a pleasure to be here.
So we've just been talking through data.
Yes.
Not just on eco, but then you look at some of these corporate scorecards as well. And I know what you're advocating is to think long-term, perhaps even ditch these quarterly results. Look at it semi-annual instead. What would this mean for investors in practice?
Yeah, I think in practice, what we're advocating for is not that we don't pay attention to what's going on the news today, the markets, anything like that, but it's to know where we're going in the long term. So I think the way that the best investors do this is, and the best companies, is they have a long-term roadmap, they have a long-term plan, they know where they're trying to get to. And then, of course, they can be nimble and react to whatever the markets give them, whatever the economy gives them. And so I think where both investors and companies get themselves in trouble is when they only react to what is happening this minute, and then they lose track of that long term.
So what is this going to mean for volatility, liquidity in the markets?
Yeah. So if we do drop so the Trump administration has really put forward three things that are, I think, as a combination, meant to be a little bit more long term in the mindset. The first is making core quarterly reporting optional for many companies. The second is these Trump accounts they've put in, which are essentially long-term savings vehicles for babies. And then the third is they're looking at the proxy advisory system. What's going to happen there is quite unclear at this point. But all three of those are, I think, ways to reorient a little bit more to the long term. So if we think about the quarterly reporting being optional, most companies don't have a lot of change, at least in their full financials, over a 90-day period. And so at least the way we would expect that this would unfold would be that companies would report their key milestones, whatever their industry is. Maybe it is same-store sales. Maybe it is some other leading indicator of where they are. And what's very important for companies is not to just go quiet for 6 months, but on the other hand, not necessarily have to do the full audited financials, which frankly, as you all well know, investors are looking more forwards than backwards. So what matters more for an investor is that leading indicator of the real business. Where's the business going?
When we're thinking about corporate report cards as those quarterly earnings, it just reminds me of what happened during even the government shutdown when we didn't get the eco data for months, right? And then we didn't have data points to actually guide investors, and that led to confusion and just a lack of transparency. Is this only going to benefit sophisticated investors that have access to private data?
No, I think it'll benefit all investors who are trying to have a slightly longer time frame. So, for example, if we have semi-annual reporting versus quarterly, in a call, ideally, the corporate management will be saying, well, here's where we expect to be going, here's where we're strong, here's where we're weak. But they won't be saying, well, our EPS this quarter is, $1.23, and here's all the accounting things that got us there.
But on those leading indicators, though, do you think that could maybe make things more complicated if maybe companies, or who's going to decide, right, what kind of data they push forward if you can pick and choose those numbers?
Right. Well, who decides now what they focus on, right? So I think it's no different. One of the things we care a lot about is the dialogue between companies and investors. And I think most companies, at least the ones that have a good investor relations strategy, understand what the issues are that their investors care about. What matters for their industry. So let's take the example of biotech. In a biotech company, maybe something happens in 90 days, but maybe they're just moving along. Now, if a clinical trial goes well or goes poorly, they're going to have to disclose that. So I think the important thing is that we move from periodicity, so every 90 days, to materiality. If it's significant, it's got to be shared.
But then again, you could do what the Japanese companies do, which is put a very conservative guidance out there and beat it every time.
Well, so let's move to guidance. So there's reporting, which is an actual reporting of facts, and then there's EPS quarterly guidance, which is clearly a detrimental practice. And so putting forward their own EPS guidance has declined dramatically over the last 20 years. It used to be about half the companies in the S&P 500 did it. Now it's only down to 21%. So actually having a company put forward their own EPS guidance is a minority practice, and it's very clear that it's a bit of a game, as you said.
When we talk about long-term, it's also a reminder of what we're seeing in AI investments, right? Data centers, that's like, 5-10-year horizons. What are you seeing in terms of, in such a practice, how that could play out in AI players?
Yes. Well, and of course, the investment in AI is been the talk of this conference and so on. They are very long-term investments that are being made in terms of building data centers, putting things in the ground. Inevitably, some of those will be good investments and some of them will be poor investments. But if you were an investor who said, I only want to invest in something that's going to come to fruition this afternoon, you could never invest in any of those things. So we do see money going into, whether it's infrastructure, private equity, data centers, whatever it may be. That requires a long-term mindset because those will not come to fruition for many years into the future.
Just before we let you go, Sarah, when you talk about perhaps scrapping those short-term results, does that apply to companies in other economies as well? Developing markets, for example, we don't have a lot of visibility there already.
That's right. So there is less in certain places there's more visibility than others, but I think that what the best investors do, and frankly what the financial media does, is shine a light on where there is something going on. And that a bit is kind of the point of really trying to focus on the things that are material.
Sarah Williamson, good to have you with us. FCLTGlobal CEO joining us here at the Bloomberg New Economy Forum, the final and third day in Singapore. Take a look at how the markets are trading, because what a great time to have all of these guests. We're talking about a sea of red, the MSCI Asia Pacific, and now continuing to fall at the lowest levels in about a week or so, and the Nikkei leading those declines along with the Kospi, because you have the SK Hynix, Samsung stocks all down, and they account for such a big part of that benchmark, given, of course, the tech worries and AI worries as well.
Absolutely, Shery. We're looking at Japanese stocks resuming their slide, given how the tech sell-off has rattled the mood. But also worth highlighting, this tech rout you're seeing in South Korea, it's wiping the Kospi 8% down from the peak. So we are watching some of those technical levels as well. Australia not faring that much better. It is certainly risk-off across the Asia Pacific. We have more ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. Now, we are watching OpenAI as well, as it's partnering with Hon Hai, also known as Foxconn, to design, to manufacture hardware for data centers. For details, our Asia Tech correspondent Avril joins us live from Taipei. Belle, I know you've been tracking this very closely right there in Taiwan. Talk to us about the announcement.
Yeah, well, it's really perfect timing for it, because you can see here behind me, we're actually setting up for the doors to open for Hon Hai Tech Day 2025. So this is an accord that Foxconn's really been teasing for the past few weeks, even in the latest earnings, for instance, with Chairman Yang Liu saying that there would be something to come with OpenAI in particular. But it's important to note that these companies are already extremely familiar with each other, because Foxconn is the largest supplier of AI servers to Oracle. Oracle and OpenAI are working directly together on Project Stargate in the US. So Foxconn is very much at the center and the core of the AI infrastructure build-out that we're seeing underway in the States today. But this is going to be Foxconn and OpenAI working directly together to design, also develop AI server racks. So AI server racks, they're incredibly complex. You're talking about more than 5,000 cables in each. So Foxconn's also going to be working to make all of this product in the US as well. That's part of the agreement. So again, just a furthering of that partnership.
What else can we expect today?
Yeah, well, this is the big event really for Foxconn for the year, Hon Hai Tech Day. It's when Chairman Yang Liu can lay out his vision and how he plans essentially to move the company not just from being the world's biggest contract electronics manufacturer, but into higher value, higher margin activities. So EVs, digital healthcare, robotics, these are all at the core. We're looking for the latest innovations they're seeing there. But also, of course, we've got a really great interview coming up with Chairman Liu in just a few hours from now. And we're going to be wanting to talk about what we're seeing in the markets, because we had those NVIDIA earnings this week. Of course, Foxconn is a key supplier to NVIDIA as well. We're seeing still those question marks about whether we're in an AI bubble, concerns about circular deals. What are Chairman Yang Liu's views on that? And is he watching any particular warning signs as well?
Our Bloomberg Asia Tech correspondent Annabelle Drewler's there, and we'll be looking forward to that conversation with the chairman on everything to do with the artificial intelligence build-out. On a day, of course, like today, where we're seeing the skepticism rise about AI spending and anything to do with the tech sector. In fact, let's talk a little bit more about what's happening here. Plaud is an AI-powered note-taking brand that was founded in 2023 and has since attracted over 1 million users worldwide. Joining us now is its co-founder and CEO, Nathan Xu. Nathan, great to have you with us here at the New Economy Forum.
Yeah, hi, nice meeting you. I'm Nathan. Yeah.
So let's talk a little bit about your sales worldwide, because you have decided to target the global markets instead of just staying in China. Why was that?
Well, apparently, if you ever want to create a great company and that's like long-lasting, you get to enter the global market. I think that's the right thing to do.
And more opportunities out, and where?
Well, so for now, Plaud has its largest market in the United States, and second followed by Japan and Europe. So, and after that, we're primarily operating in the developed markets.
What about the workforce, though? Is that more in San Fran or is that more in Shenzhen in terms of the Plaud talent that is powering this device?
Well, we actually now have a very distributed talent network, and also with our employees, right? We have our headquarters in San Francisco. We have a large office in Shenzhen.
What's the ratio of that?
Well, I would say most of it is still in Shenzhen at the moment.
Right.
But we're diversifying really quick. So, for example, half a year ago, we had literally 0 employees in Singapore, and right now we're getting close to 50.
All right.
And we're running a whole floor and getting there.
You're actually registered in Delaware, and as you said, you're headquartered in San Francisco. But at the same time, they do look at you as a Chinese company. Is that difficult?
Well, I wouldn't easily define like it is a Chinese company, it's an American company. I think in the end, you just try to create a truly great company, right? Like as a founder, as a startup founder, I don't care about like how to name it. The beauty is, are we able to create the most compelling, exciting products and help people? And I think we are.
But the geopolitical landscape right now scrutinizes Chinese companies, especially when they deal with data like you do and privacy concerns, and the fact that Beijing could just mandate whether or not they can have access to that.
But again, like the company is incorporated in Delaware, is a U.S. company, so we wouldn't have that.
Does that mean that even under some of that pressure or oversight from Beijing, are there sort of data security guarantees for your users?
Oh, I mean, let's say we actually undertake the most high standard of data security protocols. Let's say the data for the US users, they are in the US, and for Japan, it's in Japan, for Europe, it's in Europe, and for the rest of the world, it's actually in Singapore. So, like, why would we think about, like, it's just first principle.
Right.
Nobody should ever put, like, if a user is in the US, you put the data somewhere else. It doesn't make much sense.
Right. I think some of this Shery was alluding to earlier also is when it comes to the ecosystems of tech, what we're seeing is that decoupling, tech bifurcation. How does that affect your product in any way? Are you perhaps looking at these trends among consumers, what perhaps global market interest looks like versus what the domestic market might prefer?
Well, actually, like, let me briefly introduce like how we get here. So the company was started in we launched the products in the summer of 2023. It was started in the United States, and we have been operating in a lot more markets after that. But 99% of the business was in the developed markets, including the US, Japan, and Europe. So all of these three combined together would be accounting for 80%. We actually only entered into the China markets like 2 months back. So it's still very, very new. And again, like, it depends on how we think about, these definitions of, like, is it a US company, is it a Chinese company? Again, by nature, the entity was incorporated in Delaware, right? We have the headquarters there, we have lots of employees there. Actually, I flew from San Francisco with 17 hours of travel, right, like, to arrive this spot. So I wouldn't easily call it, by, this nationality. It doesn't make much sense.
Yeah.
In the end, again, like, we just want to create the best technology.
Thanks for joining us very early in the day after that trip. But it's also about sort of defining what you are, right? Services company, hardware company, because you're doing both at the same time. And at a time when we're seeing this risk-off sentiment out there about monetizing artificial intelligence, how are you seeing the market?
Well, I think we are enjoying the beauty of, having the great PMF between, large language models and summarizing people's conversations and generate the most helpful summaries. And with the business model, we are selling these devices, let's say the Plaud Notes Pro and also the Plaud Notes Pin with, let's say, $189 or $179 for the devices. And then we additionally charge let's say $100 for the Pro plan or $240 for the unlimited plan.
Right.
And for these plans, users are able to get a lot more usage for the AI transcription.
I mean, this
and
is part of the AI conversation, right? The monetization aspect of it, and your company has been able to marry both the hardware and the software, push out a product that consumers actually want. Talk to us about what you've seen in terms of interesting use cases as we see we're really in the early goings of this frontier technology.
Oh, sure. Well, primarily, Plaud is mostly adopted at among conversations, right? For example, I received a message from a user on LinkedIn earlier that it was so he was a father of a young-born child, and the child had a serious illness as a very young baby. And so he was taking this baby to the hospital, like continuously for a month. And he was so grateful that we were able to develop Plaud Notes Pin, where this father was able to wear this device and capture all the conversations between the doctor and him about the baby's health, right? It was really challenging. And so he was able to have all those conversations accurately transcribed and summarized about, what are the treatment plans and what needs to be kind of reminded of or focus on, etc. And the baby was later on getting a lot better, and the father was really kind of grateful that we developed this product. And even at another case, I was meeting a professor at Stanford Hospital, and he was telling me that a Nobel Prize winner, like a very elderly lady, who was already 90 years old, and she was recommending our product to the doctor because she told the doctor that she was recommended by another doctor.
Interesting
by having
use
this device.
cases.
Yeah.
Nathan, good to chat. Thanks for coming and sharing more about the product as well as the future build out and the plans for the market with us. Nathan Xu is co-founder and CEO at Plaud. And of course, subscribers can also turn to the terminal for more on the Bloomberg New Economy Forum. T-Live Go is your function. This is Bloomberg.
Take a look at how we're trading in the Asia session because it's a sea of red right now with especially those tech names under pressure. The Kospi at one point falling more than 4%, and this, of course, coming at a time when anxiety is rising about all of that AI spending, and of course, tech-heavy benchmarks like the Kospi, the Nikkei, all down.
Yeah, it's really the concerns about these valuations, right? And how in the past week we've just gone through this massive NVIDIA event that has tended to be a macro one for markets, but we are over that hump, and yet look at where we are on Asia stocks. We're counting down as well to the open of markets in the Greater China region as we look towards this rebalancing of the Hang Seng Index. Those results will be announced after the market close today.
Our China correspondent Min Lo is here with all of the details. Min, give us a preview of what to expect.
Yes, of course, as you said, today the big market story is the sell-off in the tech stocks, right? The perfect report card from NVIDIA failing to put to bed all the questions around AI valuation, and that relief rally that we saw yesterday proving to be very short-lived. And you can see overnight the Golden Dragon also slipping by about 3% or so. Doesn't bode well for the market open. And I want to point out the Hang Seng Tech as well yesterday touching below the 200-day moving average. If you flip the board, you can see. And if we continue to open lower and we break past that technical level, it would take us back to the levels that we had seen in the summer. And we flip the board, take a look at the stocks that we are watching in particular in the China session. Of course, the chip stocks. Take a look at where we were yesterday, the last close already in the red. So bear in mind that China is a completely different story. The Chinese stocks did not participate in the relief rally post NVIDIA earnings, unlike some of the chip stocks in Korea and Japan. And we could possibly be headed for more losses today. So something to keep an eye on, especially given that the U.S. is trying to push through another bill that would prevent the exports of advanced chips to China. And flip the board, what else we're watching is, of course, the Hang Seng rebalancing, right? And every quarter we talk about this, and it doesn't stop analysts from putting out their best bets about which are the new additions to the Hang Seng Index, even though sometimes we are really way off the mark. But here are some of the names that analysts have thrown out. CATL, a big favorite there, especially given that is the biggest listing this year, the market turnover there, making it a favorite. And Laopugo, some of these consumer discretionary stocks that are also being offered as potential contenders for the Hang Seng Index.
Bloomberg's China correspondent Mimi Lo there with what to expect in the markets, but this was day 3 and the final day of the Bloomberg New Economy Forum, coming to you live from Singapore. The China show is next. This is Bloomberg.